Okay, this is your teacher Haris Bhatt, and you are seeing my YouTube channel Learn Accounting with Sir Haris. This particular question is going to come in your February-March paper of 2025, which is going to held on 18th of February, October, November 1141. This question belongs to partnership changes. It has some part of admission, some part of retirement, in which one partner left the partnership basically, and it has some part of profit and loss sharing arrangement. Why, sir? Because the partnership agreement has changed during the year, means after 6 months. After 6 months, one partner is coming into the partnership business and one partner is going to retire from the partnership business. So it means that there is going to be a change in the capital accounts after 6 months, and we have to prepare profit and loss appropriation account for the first 6 months separately and for the last 6 months separately, because they have different partnership agreements in these two periods. So we have to arrange the profit and all the things separately. October, November 1141 is the paper. And always remember that you might not find the full-fledged question, the same question in the paper, because of the reason that this question carries how much marks? 40 marks. Now the question which is going to examine you, that will be of 25 marks. So maybe it has some part of admission or some part of retirement along with profit and loss sharing agreement. That will be a possibility. But this full-fledged question might not come in the paper. So Alan, Brain, and Clive have been in partnership for several years, sharing profit in the ratio of 3:1. So 3/6, 2/6, and 1/6 is the ratio. After charging an annual salary of Alan 18,000, we are paying to Alan, and interest on capital is 6% per annum. Financial statements are prepared. Capital account balances on 1st July were Alan 42,500, Brain 32,000, Clive 28,000 on 1st July. What does it mean? Yes, it means that our financial year is abnormal financial year. It starts from 1st July 2010 and will end on 30th June 2011, right? So Alan retired on 31st December 2010 and Dilip was admitted to the partnership on this date. So as I discussed with you, that after 6 months, Alan is going to retire from partnership and Dilip is going to get admitted in the partnership on the same date, which is after 6 months. And you can call it as Amir, that this is the date on 1st January 2011. In accounting, 1 day change in 1 day is no change actually. So 31st December is the same date as 1st January 2011. Dilip introduced fixed capital of 50,000. Brain also contributed a further 50,000 fixed capital. So Dilip is going to admit into the partnership. He has contributed 50,000 more into the business. And Brain, which was already a partner, he has contributed also 50,000 in his capital after 6 months, means on 1st January 2011 or on 31st December. It was decided that the profit sharing ratio for Brain, Clive, and Dilip would be 2:1:1 after charging an annual salary for Dilip 10,000 and interest on capital 6% per annum. See, in the first 6 months, the profit sharing ratio was 3/6, 2/6, 1/6, and there was 3 partners, A, B, and C. But after 6 months, now for the last 6 months, the profit sharing ratio will be 2/4, 1/4, and 1/4, and the partners are B, C, and D, because Alan is no more your partner. He has retired from the partnership on 31st December. The following adjustments were made on 31st December. Goodwill was valued at 1,32,000 for the purposes of change in partnership, and the following revaluations were made. Goodwill is distributed among old partners with old ratio first, and then it is going to be written off with new ratio among new partners. Non-current assets, net book value is given and revalued amount, that is the 50,000. There is a decrease in the revaluation. Let me write it down also. 50,000 decrease. Right? Trade receivable 242,000 and 216,000. How much decrease? 26,000. Then 83,000 and 73,000. Trade payables are also decreasing by 10,000. Goodwill is not to be retained in the books of account. We know that, we knew that already, that when there is a partnership change, goodwill should not be recorded in the books of account. That is already created goodwill, existing goodwill, inherent goodwill, because it is against 2 accounting concepts. Amir, one is prudence and one is money making. So we just record it for the purpose of change in partnership, and then it will be written off again. So any balance on Alan's capital account on the date of retirement is to be transferred to his current account. So this is very important. So first you need to write it down. In case of retirement or dissolution, जल्दी लिखें, in case of retirement or dissolution, all current accounts are transferred to capital accounts. In case of retirement or dissolution, all current accounts are transferred to capital accounts. But unfortunately, this is not the case in this question. But this question is different regarding this particular point. Why? Because of the reason that in this 6th point, examiner is saying that the Allen capital account will be transferred to his current account. It has never come in your exam, right? So, sir, how it has come? I will tell you. This particular question is solved as an example in Randall, HR Randall also. This particular example, not the same one, this point, has also solved in the book of David Hopkins. It is also available in Ian Harris. So that's why he has given this particular point in the exam, which is not only difficult, but also embarrassing for the student. Because we used to transfer current account into capital account, usually in case of retirement resolution, but here he is saying different. So let's prepare the partner's capital account. Let's do that. Capital accounts we'll prepare for all the partners, that is A, then B, then C, and there is another partner. 4 partners are there, D also. So how come? Because I am preparing the partner's capital account on the day of 31st December. And on 31st December, one partner is going to, Alan is going to retire from the partnership, and Dilip is going to admit it into the partnership. So we have to prepare the T accounts, capital accounts of all the partners, all 4 partners, in order to understand the question. So that's why I'm preparing all of them together. You can adopt some other way, right? But according to me, this way is the most suitable one. This is the most easiest one also, and students will be able to understand this more properly. This is what I believe. So first of all, I need to write the brought down balance sheet. So I will write the brought down balance on the credit side, because capital balance is always credit. We have an exact idea about that capitals and current account balances, they have a credit balance. So let's see. 42,500, 32,000, and 28,000. So I will write here 42,500, 28,000, 32,000, and 28,000. 32,000 and 28,000. Now, let's see what Dilip is going to do. Dilip introduced fixed capital of 50,000. So what is the entry? Bank debit, and Dilip capital credit. So what I will write here, Dilip capital is going to be credited because of bank. I will write this amount on the credit side of Dilip capital account with an amount of 50,000, which I have done. Let me pass the entry just for the reason of your understanding. So bank to Dilip capital account will pass with the 50,000. It's quite easy. Now, let's go for the next point, which is Brain also contributed a further 50,000 fixed capital. So again, the same entry, bank to Brain capital account. Bank is going to be, Brain capital account is going to be credited with 50,000 because of bank. This is something new also, because Brain is not going to retire, but he is still contributing. After 6 months, he is contributing 50,000 more into the business. So I will pass that entry. I will post this in his capital account. Next, goodwill. So goodwill, 132,000 is going to be first distributed among old partners with old ratio. The old ratio is 3:1. You have to do that. 132,000 into, I will write here, it will be distributed among old partners with old ratio. If you want to pass the entry, yes, I can do that. Goodwill to A, B, C, right? Goodwill to A, B, C. So, G, what is the amount? 132,000 into 3/6, 66,000. 132,000 into 2/6, and 132,000 into 1/6. 22,000. Right? Now I'm going to write off the goodwill among new partners with new ratio. Now I will pass what entry I'm going to pass? C. B capital account, C capital account, and D capital account is going to be debited, and goodwill is going to be credited with 132,000. And now this particular we will write off the goodwill with the ratio of 2, 1, and 1. 2, 1. This is 2 by 6, 1 by 6, and 1 by 6. And this is going to be 2 by 4, 2 by 4, and 1 by 4. So I'm not going to write the amount. I will write the amount over here. So what is the amount in B? A will not come because A has already retired. We have transferred his goodwill to his capital account, and that's it. He will take his share at the time of retirement. G. What will come? 132,000 into 2 by 4. 66,000. Okay. Then 33,000. 33,000. So we have distributed the goodwill. Okay. Any problem? Not any problem? Oh, no problem. That's now I have to prepare the revaluation. Generally, we can pass the revaluation entries and we can pass the revaluation profit directly, but I won't do that. I will go for the entries just to make you understand, and then I will delete those entries. Okay. So let's go. Let's open the page of the question first, and then I will go for the revaluations. See, the first entry is going to be non-current asset debit, revaluation credit. Why? Because the asset has been, value has been increased. There is an increase in asset amount, which is with the amount of 50,000. Okay. Decrease it? Sorry. So the entry will be, just a minute. So the entry, it is going to be, revaluation is going to be debited because it's a loss, and non-current asset is going to be credited with 50,000. Then the next entry, again, there is a decrease in trade receivable. So revaluation will be debited and trade receivable is going to be credited with an amount of 26,000, right? Then comes the trade payables. So here, a little bit of understanding needs to be required because the trade payables are going to decrease. So decrease in trade payable means that your liability is decreasing. So trade payable is going to be debited. So it will give you benefit. So revaluation is going to be credited with 10,000 to credit revaluation, and trade payable decrease in liability, it is going to be debited. Right? So next, now let's prepare the revaluation account from these entries. Generally, we don't pass entries for that. We can do it on our own also, just calculate it, but I have passed the entry just for the understanding purpose. So revaluation is debited by 50,000 in the entry because of decrease in non-current asset. We have a loss. So the abbreviation, the reference will come of non-current asset. Then revaluation debit again 26,000 because of trade receivable. Again, there is a decrease in the entry. Then revaluation is going to be credited with 10,000 because of trade payable. Now you can go for the update of this. We are going to have a revaluation loss, actually, right? In total. So debit side is heavier. I will write here how much? 76,000. Here I will write also 76,000. And 10,000 there will be how much? 66,000 is the loss. That will be distributed between old partners with old ratio. Why? Because whatever has been, we have faced whatever problem, we have faced whatever profit or loss, that is because of the old partners' efforts. So it will be distributed between old partners with old ratio in A, B, and C, which is 3 by 6, 2 by 6, and 1 by 6. So what will become? 33,000, then 22,000, and 11,000. So revaluation account, it will be written on the debit side, but if we are going to write it in the capital account, then it will come on the debit side because there is a revaluation loss. Actually, there is a revaluation loss. So the capital accounts will be decreased. Capital account will decrease because of that loss. Okay, if you have some problem, I can pass the entry also. See, revaluation account, sorry, A, B, and C capital account is going to be debited, and revaluation account is going to be credited. So this is the end of revaluation because the whole loss has been transferred from revaluation to the capital accounts. You can remember that also. If the loss or profit will come on the credit side of revaluation, it will come on the debit side of capital account. If it will come on the debit side of revaluation, it will come on the credit side of revaluation account because of profit. Capital will increase if it is going to be credited, and capital will decrease if it is going to be debited. Okay. Next, let's see if there is any other thing. The basic issue which the student have faced in order to solve this question, that was the point number 6, which we are yet to discuss. And that was the point number, the introduction of admission of a new partner and retirement of the old partner at one time on the same date. That was created problem, because the goodwill will be distributed between A, B, and C, but it is going to be written off between B, C, and D. So I have written it right between B, C, and D. And revaluation loss will be transferred to the old partners with old ratios. So that's it. Now, LN capital account, normally we used to close retiring partner capital account with, bank or loan. But here we have to close retiring partner capital account with the name current account, because the whole amount will be transferred to the current account. From there, he will take the balance. Take it from he will take it to his home or whatever. So let's total it. The credit side of LN, 42,500 plus 66,000, 108,500. Here I will write also 108,500, and here I will write what? I will write current account, because that will be transferred to the current account. 33,000 subtract. 75,500. Yes, 75,500 is the right answer. Now let's talk about brain. 32,000 plus 50,000 plus 44,000. 126,000. 126,000. Here I will write also brain 126,000, and I will write here carry down, because the partnership is going on. B, C, and D will continue the partnership. 126,000 minus 66,000 minus 22,000. Sorry, 38,000. Then 28,000 plus 22,000, 50,000. And here I will write 50,000 minus 6,000. Yes. And now the last is again 50,000 for Dilip. And the carry down of Dilip is 50,000 minus 33,000. That is 17,000. So always write the brought down also. Otherwise, he will deduct the marks. But there is no brought down of LN anymore, because he is leaving the partnership. So his capital will not be written, because he is no more in the partnership business. And now B, C, and D will be going on with the partnership. Okay, got it? Now let's move to the next part of the question. We got 30 marks. The current account balances on 1st July were LN 16852 credit. Brain, so Brain is having a loss of 7482 debit, and Clive 11743 credit. The partners made drawings in the profit sharing ratio. Total drawings were 30,000 on 31st December, immediately prior to partnership changes. Means that in the first 6 months, the drawings were 30,000, and the ratio of drawings between A, B, and C will be 3/6, 2/6, and 1/2. After 31st December, the drawings are 20,000, and the ratio between B, C, and D, because they will take drawings only, because A, LN is no more the partnership. Their ratio will be 2/4, 2/4, and 1/4. The net profit for the year was 48,000, and this accrue evenly throughout the year. It means that every month you will get the same amount of profit. It falls every month with the equal amount divided by 48, 12, you may say like that. So profit is 48,000. Any final balance owed to LN is to be paid through the bank account. Normally we used to close LN capital account with bank or loan. But now the capital account of LN, the whatever amount we are supposed to pay, 75,500, it is written. That has been transferred to the current account. So it means that now current account is going to be closed with the name bank, which is not normal. I'm again telling you, it's not normal. You will not find a single question in the whole past papers, but it has been examined, not examined. It has been given in the book, unfortunately. In your course, not course book, endorsed book, you may say like that. So now let's prepare the partner's appropriation account and prepare the current account in column form for the year ended 30th June 2011. So first of all, let's prepare the partnership appropriation account. And current account is quite easy, but we have to do separately. You have to take the pick, you can take afterwards. I'm not deleting it. So let's prepare profit and loss appropriation account. We have to do something different. How come? 31st December 2010, right? And then 30th June 2011. This is the way. Up to 31st December, you can write like this also. Okay. Up to up to 31st December 2010, and here also up to 30th June. Okay, and you will go for the two column because you are basically preparing two appropriation account, one for the first 6 months and one for the last 6 months. So I will write profit for the year first over here, right? So profit for the year is 48,000, but for the first 6 months, immediate profit will be half. So 48,000 divided by 2 or into 6 over 12, you will get 24,000, and here profit will go 24,000. Total will become, and how come? I told you that 48,000 profit is the profit for the 12 months. 48,000 divided by 12, 4,000, 4,000 into 6, 24,000. So the first 6 months, the profit accrue evenly throughout the year. The profit is 24,000. And in the last 6 months, the profit is 24,000. Sir, why we are basically preparing the appropriation account separately? Very good question. Sir, it is not written in the requirement. Prepare an appropriation account. Problem is this, that the salary for the 2 years, you usually add interest on drawings in this, but we have no interest on drawing. Thank God, little bit, because the salary is going to be different and the interest on capital is also different for the first 6 months and for the last 6 months. That's the problem. So let's talk about the salary. If you talk about the salary, who is getting the salary in the first 6 months? Where it is? Dilip. No, not Dilip. Alan retired from, okay, charging an annual salary of 18,000. 18,000 is the annual salary. So for the first 6 months, we will pay him a salary of 18,000 into 6 over 12. So that is going to be how much? That will be less salary, and that is 9,000. Right? Next. Sir, what about the next 9,000? It will not be paid. Why? Because the next 6 months, Alan was not the partner. That's the problem. Less interest on capital. We will pay interest on capital to A, B, and C according to their respective capitals. Capitals are 42,500, 32,000, and 22,000. The interest on capital is 6% per annum for the first 6 months. So let's do that. I will calculate. I will show that also here. 42,500 multiplied by 6% into 6 over 12. Why? Because this capital has been used only for the 6 months, for the first 6 months. Sir, what happened afterwards? Afterwards, the capital has been changed. Amount of capital has been changed, and one partner Alan has left the partnership business. So what is the amount? Sorry, 1,275. Next is 32,000. Oh, sorry. 32,000 into 6% into 6 over 12. How much? 960. Next, 28,000 into 6% into 6 over 12. 840. You need to add it up because I have to write it down in the next column. And it will be subtracted actually. Yes, 3,075. If you want to write the negative sign, you can. If you don't want to write the negative sign, even that is fine, but you have to subtract it. Here I will write the profit shared. How much it is going to be profit shared? After subtracting 9,000 and 3,075 from 24,000. Zabardast. Excellent. 11,925. And this profit will be shared between A, B, and C because D is not here yet. D has admitted after 6 months. Okay. A, B, and C. And the ratio is 3/6, 2/6, and 1/6. You need to tell me the profit ratio or profit amounts.
For A, 5,963.
5,963.
B, 3,939.
Okay.
And to C, 1,987.
1,987. Okay. Let me check. You can check it out again. So the ratio is 3/6. This is the ratio. Fine. Okay. Now I'll write the total also again. That is 11,925. Next, for the next part, we are basically giving a salary to Dilip. Now, in the next six months, thank God we don't have interest on drawing. Otherwise, we have to calculate interest on drawing also separately by dividing the drawings and then multiply it with the percentage of interest on drawing. It comes in the question also, right? Drawings are given. Okay. So here it is the new point again, difficult point also. To Dilip is how much? Is 10,000, right? And that will be paid to Dilip for the last 6 months. So the salary will be 5,000 for Dilip, right? So it will be subtracted over here, 5,000 Now interest on capital is the basic point. Always remember that the interest on capital in the last 6 months has changed. The capital percentage is 6%. It might be 4% also, 5% also, right? But the capital accounts for which the interest on capital is calculated, these are the new capital accounts after 6 months. So we need to calculate 6% interest on capital for 6 months only for B, C, and D on these respective capital because the capital amounts are now changed. Why? Listen to this. पहले 6 महीने में जो कैपिटल बिजनेस में लगा रहा फातिया वो था ए का 42,500, 32,000 और सी का पहले 6 महीने के एंड तक, लिहाजा उन पर उनको इंटरेस्ट ऑन कैपिटल दिया गया। उसके बाद 31 दिसंबर से लेकर 30 जून तक बी और सी और डी के कैपिटल बिजनेस में लगा रहा कितना 38,000, 6,000 और 17,000, लिहाजा इन पर उनको इंटरेस्ट ऑन कैपिटल मिलेगा या बिजनेस उनको देगा। समझ आई? सो दैट्स व्हाई आई विल कैलकुलेट ओवर हियर 38,000 into 6% into 6 over 12. Yes, this is the amount. I can write. Okay, 1140. Next is how much? 6,000 into 6% into 6 over 12. How much?
180.
180. Then 17,000 into 6% into 6 over 12. 510. And the total will be, which is going to be subtracted, obviously, 1830. So now you can find the profit shared, that how much we will be having the profit shared regarding the last 6 months or up to 30th June 2011. Yes. 17,170, and this profit will be transferred to B, C, and D, not to Ellen, because Ellen is no more partner for this partnership business. He has left the partnership business. He has retired from the partnership business. He will not get any profit. So what is the 2 by 4? 1710, 179, 8585, again 8585, and then yes. 211. 211? Okay, sorry. So C is going to be, I will write here C, and that is 1 by 4. So how much? 4292.5, again 4292.5. So the total will be the same again, that is 17170. So this is how we have prepared the appropriation account for both the periods, that is up to 31st December, the first 6 months, and up to 30th June 2011 for the last 6 months. Now I will prepare the current account. One very enjoyable thing which you feel very happy to see, that I used to prepare the current accounts always together, but I used to write the 6 months period amount separately and the last month period amount separately. But if you just see the mark scheme, in mark scheme generally they used to prepare the current accounts with a combined amount together. Sir, how come? I didn't understand. Let me explain you. But now in the last exam, Alhamdulillah, in October, November 2024, when we are going to have a lot of questions regarding profit and loss sharing arrangement, they have separated the amounts. They have prepared the current accounts in the mark scheme now separately, rather than going for a combined amount. So this is something very good for the students and to understand the question also. So I feel very, and I will tell you that what I'm saying actually, but what is the bottom line. So first I will have to write the current accounts. Let's see. The balance in the current accounts are given for A, B, and C. 16852 credit for Ellen. Let me write here, brought down. 16852 for Ellen. Then we have 7482 for Brain. It will be on the debit side because this is basically a loss, or we have to take that amount from Ellen actually, and we have to give that 16852 to Ellen, and we have to take that amount from Brain. Then Clive, we have 11743. Again, it is having this credit balance. 11743. Okay. If I can just make it little understandable. So just go for the better arrangement of this. Okay. So for Clive, it is going to be 11743. So preparation of current account is very simple. To be honest speaking, it's very simple. Because if you have prepared the preparation account, the current account will not create any problem. Why, sir? Because you will write share of profit. What you will write here? 6 months means first 6 months, right? And then last 6 months. You can write easily. The first 6 months, the profit will be distributed between LN 5963, then 3975, and for Clive, it is 1987. And for the last 6 months, the profit will be distributed between B, C, and D. We have calculated it. Where? In appropriation account. Here it is written, my dear. So it is already, we have already done that. We have already calculated that. So that is 8585 for B, 4292.5. And here 4292.5 for D. Okay. Now I will write here the drawings. Right? Again, drawings, I will write how the first 6 months and last 6 months. Okay. So let's see. The first 6 months drawings, which are given in the question, is going to be how much? Here it is written 30,000. It is written here, total drawings by 30,000 on 31st December. So this will be distributed between the partners in the old ratio, 30,000 into 3 by 6. How much? 15,000. Then 2 by 6, 10,000. And then again, 10,000. 5,000. 5,000. Okay. Oh, मैंने गलत लिख दिया. Sorry. वो नीचे लिखना था ना. Sorry. Here. 15,000, 10,000, and 5,000. For last 6 months, the drawings given in the question is 20,000, and it is distributed between in the ratio of 2:1:1. So that is going to be 10,000 and 5,000 and 5,000. Oh, sorry. Yes. But remember this, if interest on capital have been given in the question, then you have to calculate interest on capital on these amounts, on these drawings, which I have calculated now. You would have calculated that earlier to find the interest on drawings, which is not the part of the question. Okay. So share of profit I have written, drawings I have written. Now other things, salary. Nothing can be missed in the question. How come, sir? Because I know that I have all the things available in the appropriation account, except drawings. So salary for LN, we have paid for the first 6 months. I can write here again. First 6 months, the salary for LN is 9,000. And for the last 6 months, the salary for Dilip is 5,000. Right? Now comes the interest on capital. Again, I will write for 6 months and last 6 months. Let me change the format a little. Okay. G. So interest on capital, first 6 months I have calculated 1275, then 960, and for the last we have how much? 840. And for the last 6 months, the interest on capital is supposed to be given to B, C, and D. That is 1140 and 180, and to D it is going to be 510. So this is how we have prepared the current account. Current account is little lengthy, you can say, but it is not difficult because it is going to be prepared from the appropriation account. So we can prepare it quite easily. So let's complete it. and find the closing balances also. So first of all, we'll talk about the LN. So we can go for the total of LN current account on the credit side. If you can do that for me, 16852 plus 5963 plus 9000 plus 1275. How much? $33,000 I will write here 33090, and the balance will be written with the name bank. That's the issue. That is the main issue of the question. Problem is this: we have never done that before. That unfortunately, the capital account of LN, which is the retiring partner, is not going to close with bank or loan. It is going to be closed with the name current account, because we have transferred whole amount in the current account. Like we have passed this entry actually. LN capital account debit, sorry, and LN current account credit. So LN capital we are debiting because of current, and LN current account is going to be credited because of LN capital account. So have we transferred that amount yet? No, we have not transferred that amount yet. Right, Amir? So we have to write that amount now. Don't miss that. This is a new point. That's why I have written it again and I'm telling you again. Because this is something rare which has been asked in the question. So the total is not here because I have to go credit the current account also. So current account is going to be credited over here because of LN capital account. Right? And the amount is 75,500. Now I will go for the total of the credit side. And how much it is going to be? Yes, 108090. I will write here also 108090, and I will write the difference with the name bank, because basically he is retiring from the partnership. We are paying him whatever he has in the partnership business. He will get that amount through current account, and that's why we are paying. Out of capital, actually, he is taking 75,500 along with his goodwill and revaluation. And from the partnership business for the first 6 months, he will be taking interest on capital, salary, and his share of profit. And drawing will be subtracted, and we will get the amount, required amount, whatever is going to close with the name bank. How much it is going to be? Okay, okay. So this is actually not the right amount. This is 108590. Okay, thank you. I will write here. Difference between 108590. Here I will write also 108590. And the difference is going to be written with the name bank 93590. We will close it with the name bank account. Now, let me do for the B. If you talk about B, I believe that it has a loss again. So the debit side is heavier. I will go for the total of the debit side first. That how much I will get with the total of the debit side. Yes, 27482. I will write here also 27482, and I will write the carry down. 1282. Here I will write the carry down because I don't have this place. 12822. Okay. Now, if you talk about Clive capital account, we have 11743. Credit side is heavier. 1987, 492.5, 840, and 180. So how much? 19042. Okay, 19042. Okay, we have a little less space. One 19042.5. In paper, you will be given all the tables will be given. So 19042.5. And if we subtract it here, I will get the carry down 9042.5. Okay. I will write total downstairs now 19042.5. Okay. Next is going to be the Dilip capital account, and the total for Dilip is 4292.5 plus 5000 plus 510. 9802.5. 9802.5, and I will subtract it to get the carry down of Dilip. 4802.5. ये मैंने गलत लिख दिया, इसको ठीक कर लेता हूँ मैं. Brain, because it will come on the Clive column. Brain has a loss actually, so it will write over here 9042.5. Now I will write the brought down. Here you can write it on your own because I don't have the space, that much space available. So this is how we have solved this question. And brought down is compulsory because he has asked you to go for the brought down. We have brought down of over here on the right side, we have brought down of Clive 9042.5, and we have a brought down of 802.5. 4802.5, and we have a brought down over here for Alan has already left the partnership for Brain, that is negative 12822. So we have a loss in the Alan account or Brain account because we have to take that amount from Brain, and we have to pay Clive and Dilip for 9042.5 and 4802.5. This is how we have prepared the current account and profit and loss appropriation account. Both the things will not be a part of the question because we have to cover this question in 25. It's a 30 minutes, and it's a 25 marks question. But this question carries 50 marks. That's why it is little lengthy. The current account point might not come in the paper because it has come only once in the past paper, but it is available in the book. That's why I have solved this question for you. So this is how we are done with this question. Identify two possible advantage and two possible disadvantage to Brain and Clive for admitting Dilip to partnership or on the retirement of Ellen. So you can easily find it. Maybe he is skilled, expertise, right? Or he's getting more resources or more capital will be introduced. So these kind of things, you can write it down. Now the next question. This is I have done October, November 11, 41. And this is the question of May, June 11, 43. Poppy and Rose, right? So I will try to solve this question with you in the next class, right? So thank you very much. Take care. Allah Hafiz.